Hello everyone, and welcome to the Profit Report. I'm so glad to see so many of you joining us at the Financial Profit, which is now one of the top performing investment communities globally. Today, we have a very special topic. We will discuss one of my favorite companies and my most significant portfolio holding, Tesla. Also, you'll want to stick around until the end as we will discuss where Tesla stock could be headed over the next few years, and you might be surprised by the potential returns. I recently upgraded Tesla from a buy to a strong buy due to several factors, including CEO Elon Musk's enormous conviction in the company based on his recent $1 trillion compensation plan, open market stock purchases of over $1 billion, and the company's transformative growth potential in AI, full self-driving FSD, energy generation and storage, robotics, and more. Now here's a one-year chart of Tesla. Tesla stock has also performed very well from a technical perspective recently. We witnessed a breakout above 380-400 resistance, which is around the price point where Elon accumulated a considerable number of shares. While the stock put in a near-term high around 470 to 480 resistance, which is right around its all-time high achieved toward the end of last year, it has had a very constructive pullback since. Last Friday, as the US-China trade dispute escalated, Tesla hit a low of around $400 in after hours. In full disclosure, I added about 2.5%, slightly above $400. I think it was like 402.80. So I increased my Tesla position quite considerably, around $400, bringing my total Tesla position to roughly 14% of my total portfolio assets now. Technically speaking, though, the drop from 470 to 400 represented a correction of 15%. Now, is this enough given the enormous run-up recently and the swift bounce back following the recent dip? Will there be more downside ahead? Remains the million-dollar question. In my view, Tesla could temporarily dip below 400 on a transitory move lower, especially if the broader market has a more considerable pullback of 5 to 10% in future weeks. Now, if Tesla stock falls below 400 support, my plan is to purchase another 3% around 380 to 370 level support, and then I want to purchase another 3% if it goes down to 360 to 350 lower end support zone, which is actually my optimal buy-in area for Tesla. Now, if it does get that low, I will fill my position to a full 20%. Now, some of you may be wondering why I would want such a big position in Tesla. So let me explain. My portfolio has often had leading positions, which is one of the reasons for my all-weather portfolio's continuous outperformance over the years. A long time ago, in about 2006, it was Apple when the iPhone was coming out. Then in around 2011, it was Netflix when Netflix was coming out with streaming and its own content. Tesla has also been my top position in the past. More recently, I built Palantir up into a 15 to a 20% position, and I even called it my top stock for the next decade when its price was still only at around $8. Now, think about it. Palantir stock almost hit 200 recently, so we made a massive return on that. That turned out to be also one of my top 5 stock investments of all time. Now, due to Tesla's enormous growth potential in transformative and disruptive industries like AI, electric vehicles, full self-driving, robotics, energy generation and storage, quantum computing, and more, Tesla stock could go considerably higher in future years, despite all the negativity surrounding the shares and many of the bears screaming that Tesla stock is gonna go lower. I find that argument deeply flawed, to be honest with you. Moreover, it's not only that Tesla can lead in many of these highly lucrative futuristic segments, but Tesla could potentially dominate sectors like robotics, FSD, energy generation and storage, and potentially even electric vehicles again. Tesla's enormous and highly efficient ecosystem is one of its most powerful moats and competitive advantages, which is something that the naysayers and the Tesla bears completely avoid, this very crucial fact. Additionally, Tesla's remarkable economies of scale capabilities also provided with a significant advantage over its adversaries. Now, Tesla, when it manufactures anything, and we can just take electric vehicles, for instance, it has a higher gross margin than anyone, much higher than Ford, much higher than General Motors, higher than Toyota, higher than Honda, higher than everyone. And this is because Tesla has a superior technological advantage manufacturing-wise, which is extremely, extremely important. In addition to Tesla's enormous ecosystem and highly advanced infrastructure, Elon's other companies like SpaceX, Neuralink, XAI, the Boring Company, and other ventures under his umbrella are collaborating with Tesla, enabling it to gain an even greater edge over the competition, which should enable Tesla to continue to increase its market share in multiple very lucrative and highly profitable segments in future years. But let's focus on Tesla's comeback in EVs for now. So Tesla's electric vehicle business is breaking records again. And really, it does appear like Tesla's EV business is back. Let's look at Tesla's latest delivery numbers, as Tesla delivered a record number of vehicles in the third quarter. So Tesla actually delivered about 497.1 thousand vehicles in Q3 alone. Think about that. That's almost 500,000 vehicles just in one quarter. And yes, this marked its best quarter delivery-wise in history. This dynamic illustrates about an 8% increase over last year's roughly 462,000 deliveries report. We can also presume that due to the Model Y refresh and other upgrades. So again, we can also presume that due to, the Model Y's amazing refresh and other upgrades in its other cars like the Model 3 and upgrades in Model S, Model X, average selling price, ASP, likely increased in Q3. The Model 3Y segment may have generated an ASP of about 43,000 per vehicle in Q3, which is considerably higher than Tesla has been providing in recent quarters. Therefore, the Model 3Y segment alone may have generated about $20.27 billion in revenues adjusted for lease accounting in Q3. The ASP in the premium Model S, Model X segment, which also includes Cybertrucks, may have remained around 100,000, which would equate to roughly 1.48 billion in sales in that segment. Based on previous reports and all available public information, I estimate that Tesla's leasing revenues were around 450 million in Q3. Automotive credit revenues may have been about 500 million last quarter. Energy generation and storage could have delivered about 3 billion in sales, and the so-called services and other segment may have provided about 3.3 billion in sales last quarter. So my Q3 sales projections for total automotive revenues are 22.7 billion. Now, once we add energy generation and storage services and other to that, the total sales for Q3 is likely around 29 billion. Now, the consensus estimate is only for about 26.5 billion, which is a huge disconnect and is considerably lower than my figure. However, some higher end estimates go up to about 29 billion. So I'm not alone in predicting these higher revenue estimates. And I just provided basically a blueprint of how Tesla can achieve these sales numbers for Q3, which it's about to report actually next week. So therefore, I believe some analysts may be, or actually many analysts are likely behind the curve on Tesla and could be surprised by higher than anticipated sales and profitability when Tesla reports Q3 earnings on Wednesday next week. However, let's take things a bit further and see how profitable Q3 may actually be for the company. Last quarter, Tesla delivered a very healthy 17.2% gross margin. However, given the higher ASPs, average selling prices, and potential continued improvements in production efficiencies, Tesla's gross margin could come in at about 18% or higher for Q3, but I'm going to use an 18% gross margin just to be on the modest side for my estimate. So that would give us a gross profit of about $5.22 billion. This dynamic implies that Tesla's gross profit may be considerably higher than last quarter's $3.88 billion gross profit. Tesla may have also improved its general operating expenses over the last quarter, but again, for the sake of being conservative and modest, let's presume that the operating expenses remain about the same as they were last quarter. So R&D costs, I am putting in at about $1.55 billion. SG&A expenses, I am estimating to be about $1.45 billion. So total operating costs for Q3, in my view, could be about $2 billion. Now, that gives us an operating income of $3.22 billion and an operating margin of 11.1%. But Tesla has produced 14-15% operating margins in the past, and it can return to those operating margin levels in the future and potentially higher, in my view. Interest expenses, and other could have equated to about $300 million last quarter, so that gives us a pre-tax income of roughly $2.92 billion, which then translates to a net income of about $2.48 billion for Tesla in Q3. And once we adjust that for normalized earnings per share, that gives us an EPS number of about 70 cents. Now, here's why analysts may be way too pessimistic. Just look at this EPS estimate chart. The consensus EPS estimate for Q3 is only 55 cents. Lower end estimates drift down to only 33 cents. However, my estimate is around the higher end of the range, which is roughly 70 cents. I believe Tesla can achieve this figure, which would be very bullish for Tesla's sentiment and its stock price. Therefore, Tesla stock could experience a considerable move, possibly to new all-time highs after earnings, and it may continue trending higher after that. Future growth drivers like FSD, AI, robotics, energy, and other segments should enable substantial sales and earning growth to materialize, which should also enable Tesla to continue to trade at a premium multiple in future years. Due to this bullish intermediate and longer term dynamic, I have a $650 12-month price target on Tesla's stock, which represents about a 50% upside potential from its current share price. However, my longer-term 3 to 6 year price target range for Tesla is $2,500 to $3,500. Thank you very much for watching my profit report about Tesla. I genuinely hope you enjoyed it, and more importantly, that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comments section below. If you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos for you guys. You can also join the Financial Profit, my exclusive top-performing investment community, which is Seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time, and have an amazing day.